A rate hike has been predicted. Let's have a look. Hello everyone, Florian here, and welcome to another episode of HeiseSays. Grab your stein of coffee because, well, with today's interest rate, or not, today's CPI figures coming in, another rate hike is predicted. Let's have a look at a few things. So we'll jump over here to, nope, not that screen, this screen here, and this is the trading economics interest rate data, and we can see they haven't really got a forecast or a consensus for the next round of the cash rate. It's sitting at 3.1%. If we bring up this chart here, you can see that sharp increase in the cash rate for quite some time. I didn't have to bother updating this chart, and then I had to jump in my software and update it every month. So this is the biggest, sharpest increase in the cash rate, I'd say, in the memory of most Australians. Now, there's a whole generation who have been working, and all their working careers pretty much only know rates going down. So there's some people that are going to learn some valuable lessons. They may have to, budget to deal with this. And now let's have a look here at the RBA rate tracker. This is the rate indicator for February 2023, the next rate increase. And today on the 12th, as I'm recording this, there's 39% chance of no change and a 61% chance of an increase to 3.35%. So these rates are getting high, everyone. Now let's jump over here to the other screen and have a look at this article about economists tipping another interest rate hike after the latest inflation data. So let's have a look at what Katie's written here. Australians have been told to expect another interest rate hike after the release of disappointing inflation data. Economists are tipping another interest rate hike after the disappointing data released this week, revealing inflation had climbed back to a 30-year high. I can't imagine anyone is at all surprised with inflation as high as it is. It certainly feels like it every time I go out shopping. I mean, remember, everyone, we're not in the time of 7-Eleven $1 coffees. That was the index. That was what we were measuring everything against. I miss them. Now, when I go to Bunnings, it's $2. And I can't quite justify that. I'd still buy it, but it's harder to justify. The RBA is expected to raise the cash rate by a further 25 basis points from its current 3.1% when its board meets for the first time since December on February the 7th. The central bank's decision will be guided by data published by the ABS on Wednesday, showing the monthly consumer price index rose 7.3% in the year to November 2022. The monthly CPI jumped up from 6.9% recorded in October to return to the level recorded in September. The renewed strength in the CPI comes despite the RBA having rapidly lifted the cash rate since May last year from a historic low of 0.1% in a bid to curb consumer spending and put downward pressure on inflation. It's almost as if there's something else impacting inflation. Almost perhaps supply side factors in inflation, which the RBA is not going to have much impact on. Oh, well. Beta Shares Capital Chief Economist David Bassanis said he thought the central bank would treat this week's inflation data as a bit disappointing. Inflation is still uncomfortably high, even if it's coming off its peak, he said. He said floods pushing up food prices, a strong housing market, and high energy costs were some of the drivers of the latest inflation spike. Yeah, but I mean, housing it's not really counted in this CPI, is it? Depends on part of it is. It's let's just say if they counted housing properly, CPI would have been much higher and much more on target for much longer. He expects the RBA to announce a 0.25% increase to the cash rate, which guides interest rates set by lenders after its meeting next month. If they pause rates now, it's going to be very hard for them to start raising rates again without risking destabilizing sentiment, he said. CanStar's Blue Finance expert Steve Meckenbecker is also predicting a 25 basis point hike in February, saying the RBA has got to be disappointed with the latest monthly CPI figures. It's all you people buying before Christmas. That's what it is. It's your fault, guys. You should just stop spending so prices will go down magically. Mr. Mickenbacker expects the central bank to raise the cash rate by another 0.25% in March before taking a breather. Let's say we end up with a cash rate of 3.5% after the first 2 weeks in March. That's then virtually a year for interest rates to have slowed things up, he said. He said the blunt instrument of interest rate increases only directly impacted mortgage holders in the short term, with more time needed before its effects are felt across the broader economy. At some point, it starts to filter through businesses investing less and employing fewer staff, he said. And you're going to have articles like we're looking at where people are, on the ABC, of course, people are bitching and moaning about the rates going up and how they believe the RBA that the rates, or the media, that the rates would never go up until 2024. I don't know how the hell they were going to afford their house in 2024 when rates went up, but don't worry about that. This is an ABC sob story. And the takeaway from it is, which is quite unbelievable, is that these people may have to budget. Okay? So there's people here expecting housing to crash because Aussies are going to be forced to sell. We've had it pretty good for so long. You've got people who've never had to budget. Think about that. That's what doing it tough is to them. I don't know how the hell the ABC can publish that with any seriousness. I mean, think about it. Never had to budget. I guess that's I would say is an example of privilege. What do you reckon? It will still affect demand and supply in the economy, yes. Treasury has been expecting inflation to peak at 8% in December. The ABS will release quarterly CPI data for the December quarter on January 25th, less than a fortnight before the RBA board meets again. The CPI measures the average change in the price of a basket of goods over a certain period of time and is used as an official marker of domestic inflation. So let's have a bit of a talk about this one, guys. So here we have it. More predictions of interest rates increasing, the cash rate heading up to 3.5% or 3.35%, not 3.5. Hold your horses, Florian. Calm down. Would you be surprised? Let me know in the chats, guys. Would any of you be surprised if we see rates at that? I wouldn't be surprised if we tick up to 3.5 and it just flatlines. I'll be shocked if that didn't happen. We'll have to see. Remember, guys, this is something that if you're in a situation, particularly when you've got a locked-in mortgage at a lower rate, you know what's coming. So prepare for it. Hey, maybe you get some money from the ABC, eh? Do they pay for their articles? Let us know. I've got a locked-in mortgage, man. I could put on a sob story. Oh, my house never got finished. I'm waiting for myself to build it. Boo-hoo. What do they pay? 2-3 grand? A story? Bloody hell, you could pile on the bullshit and make a fortune. Anyway, guys, take care. Check out my other channels, Heise BIM and Heise Does. And if you're a fan of the channel, you can support us financially on YouTube or Patreon using our referral links, buying our pocket squares, or calling us if you need an architect. Take care, everyone. Have a great day. And I'll see you in the next episode of HeiseSays. Bye for now. Other poor people will have to make a budget, guys. Wow. I mean, it must be. It's just the class divide here in Australia. That's what it is. It's the class divide in Australia.